Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I'm excited today to be here with David Reed of Reed and Jolly. David, how are you today?
I'm doing absolutely fabulous. Thanks for having me on board.
You got it. Well, I've had you on a couple times, and I first met you back at NCUA. You helped us do some strategic planning, as I recalled, and those were always fun sessions. And I always enjoy chatting with you here on the podcast. But if someone isn't familiar with your work or hasn't seen or heard you on the podcast, could you kind of give a little bit of your credit union related background?
Yeah, absolutely. So I'm a recovering general counsel. I've been an attorney for a lot of years, but I spent about 8 years as senior executive general counsel with a federal charter, and that's how I kind of fell into the cooperative movement in the late '90s, and then. mm, Not long before we met, right? And I always think, may you live in unique times. So
Right.
that would have been probably '08, '09. I left and formed my own practice. I practiced with a gentleman by the name of Bruce Jolly, and all we do is focus on credit unions as outside general counsel. And I do an awful lot of training, both virtually and live. And then I do, a handful of strategic planning sessions, and then top it off with a few operational, projects, be it governance, be it, collections, credit reporting, whatever comes along, and just loving life. It's a great industry. I'd like to think I could bring a unique voice, and experience to it.
No, I get that. I get that. And I had recently done one or two podcasts on Jackson Area Federal Credit Union. I think you had listened to one of those and you shot me a text or an email. We were kind of chatting back and forth. And I think you were just on the cusp of doing a supervisory committee uh, fraud type training. So that kind of triggered us to say, hey, it's time to get back on the podcast. I'm going to tee it up. Jackson Area Supervisory Committee fraud. What's going on in your world?
So, I mean, in a tribute to, I guess, is it Macaulay Culkin? It's
Right?
and yeah, when I shot you that, I was just kicking off a 2-day national supervisory committee school, and talk about timing. And in our world, maybe we probably don't need to say it, but for all of the viewers and listeners, no one relishes when events like this happen. But it would be, and no pun intended, it would be just about criminal if we didn't take the opportunity and ask the what if questions, right?
Yep.
And I told that group, I have a visitor who's
All right.
um, and I told that group that their timing couldn't be any better because in my initial review of what was going on, the largest credit union fraud that had ever been and committed, and that we were going to be utilizing those allegations, and let's say that word several times: allegations, allegations, allegations. Um, and we were going to be using that as a learning tool, as a process to ask ourselves certain questions as far as looking at what we do feel we know so far, and then looking at the general structure of a federally chartered credit union and the vast majority of state chartered credit unions, and then really breaking down the role of each of the players, and bringing back the question, which is going to be, would we catch that at our credit union? Um, and so that's where I am with it. Like everybody else, I'm monitoring what comes out. Um, at least as of a few hours ago, what I'm able to see publicly, and I know we both appreciate that, right? In between interviews and chatting with people that are in different positions, we always have to stick to what is known publicly.
Sure.
Uh,
Right.
but the last big thing that happened was that the NCUA's lawsuit, of course, was expanded. They added additional allegations, and they added a third person, right? And I think when you and I talked, it was right before they did that. So now we kind of have uh, the triangle, if you will, right? And not Cressy's fraud triangle, but we have fraud was allegedly committed by the CEO, her husband, illegally placed regulator in the state of Mississippi, and now we have, I believe, a branch manager who came in at the invitation, allegedly of the CEO, and was a longtime friend.
Yeah, boy, the more people that you get, obviously the husband, wife, that doesn't surprise me. And if you've only got one person doing it, it makes it impossible for them to ever go on vacation because there's no one there to put, when the water comes get through the hole in the side of the boat, you got to have someone to hold it there.
Absolutely.
That's the role the branch manager played over time. It got the juggling of all the fraud and keeping it from getting caught. Maybe that's why that person came in. But of course, we know that ultimately there will be an inspector general audit by the NCUA. They'll do a lot of interviews. They're doing the fact that they're suing. That's going to the documentation that comes from that suit will help the IG do what they're going to do there. But so going back to the training and the classes that you've had, so would we have caught that? So what were some of the discussions with the supervisory committee? If I was a fly on the wall of those trainings, to the extent you can share, specifics of one.
Absolutely. Well, I think you'll recognize the themes. I mean, first of all, in every single element, management, staff, the auditors, the examiners, the insurers. Let's remind ourselves, it's a very human process, right? So we
Correct.
can have regulations, we can have best practices, but at the end of the day, somebody somewhere is going to say to themselves, okay, I think I think David's a thief. I think David's doing something wrong. And when that's a well-loved person, right, under the view of, let's say, the board and the supervisory committee or an examiner, not a CPA, but whoever, not the auditor, someone who's known them for years and years, it becomes a tough question. I mean, people, they're like, oh, well, I've known him for so long. And so my lead in would be this, always remember that trust is not an internal control, right? And so that's what I led with on this. I said, let's break down what we know, and we know from the supervisory committee perspective, the top of their obligations are all focused on internal controls. When you look at it from the federal perspective, I mean, 715 is just internal controls, as mentioned dozens and dozens and dozens of times. In the actual marching order, 715.3, two of the four kind of pillars of that just talk about internal controls. Have they been set up? Created by management, set up to do what the board wants to do, and then tested by the board of directors. So it was a very good focus to take that word that's used all the time and make it meaningful. It's
Sure.
not a regulatory word. It's policies, it's procedures, it's philosophies, it's random audits, it's dual controls, it's all of these things. So that's what I focused them on. It's one of these, situations that, it's horrible for the members and the Jackson community. It's just horrible. They will never regain that trust. The immeasurable damage that this has done is, will continue for years and years and years to come. However, also for years to come, we'll be looking at this, and we will be breaking out, again, not as a gotcha way, but the would-haves, could-haves, and should-haves. And so that was my initial focus. And I will say that one thing I continued kind of throughout, when we look at the allegations, if we just look at the behavior, and I don't think I need to say allegedly anymore. Again, these are all just, I'm speaking from the NCUA's lawsuit as amended.
You got it.
And if we look, as memory serves me, from 2024 to that fateful meeting, I believe in April or May of 2027, we're looking at over $20 million that passed, not just the credit union, which, let's face it, would just be an unbelievable fraud. Well, unfortunately, not unbelievable. It would be a massive fraud. But we're talking about monies that passed either through the CEO's account, and then when she was confronted, she shut down that account, and another 10 to $12 million passed through her husband's account at the credit union. And I look at that and I just say to myself, okay, how many people in this room, and there were probably 100 people in the room. How many of the people in the room, when you think of yourself as insider abuse, insider loans, or account activity,
Right, right.
how many of you are just looking at that? And we've both seen that, Mark. Unfortunately, I mean, typically it's with a much smaller credit union
Sure.
where you have, a procedures, audit that's not real good. And you ask the question, did anybody look at the CEO's account? And everybody, well, not everybody, but oftentimes people go, I remember working a fraud that made some amount of national headlines. And in trying to do my job, but also to answer those nagging questions, I asked the supervisory committee, I said, well, in looking at your documents that you provided me, it said that you did random loan audits. And this particular fraud, a good amount of the money was moved through non-existent loans or improperly modified or created loans. And I said, it says that you did random loan audits. You've been doing that for a while. I said, tell me how you did that. And the first thing out of their mouth is like, oh yeah, we're very proud of it. We had a worksheet. We would go into the meeting room. The CEO had the selection of loans we were going to review, even did the initial filling out. We looked through those. We could ask any questions. So we thought we did a really thorough job.
Yeah, he made our job real easy.
What about the CEO? And they're like, well, what about him?
Yep. Yeah, those insider account reviews, it's important for NCUA to look at them. It's important for the supervisory committee to look at them. It's, you can't view it as stepping on toes. Or some of the questions that the supervisory committee has to ask are difficult, right? Some of the questions that an internal auditor that's on staff that has to ask management is difficult. And clearly some of the questions NCUA has to ask, it sits into the same vein, and then it is human, right? So you hear a plausible answer, right? But going back to, was it Reagan?
Trust but verify.
Trust but verify, right?
Yeah. SALT II, absolutely. The nuclear treaty. And I use that all the time. I call him Uncle Ronnie. No disrespect, but
Right.
Absolutely. And going back to that human part, the internal auditor. All right. Well, under proper best practices, they should have a direct line to the supervisory committee or audit committee, dotted line to the CEO because they're an employee. And yet we all know, if that CEO looks at him and says, this CEO looks at him and says, you know what, I don't have time for this today, come back, that auditor is probably going to slink away.
Right.
The supervisory committee, hey, they know this person. They've known this person for a while. They just got approved for a great, training adventure somewhere. So, the examiners didn't bring up anything on it. The auditors didn't bring up anything on it. So, what's the issue?
Did you have any discussions about agreed upon procedure? So there's, in my mind, there's the full opinion audit required over 500 million.
Yes.
There's agreed upon procedures below 500. And then there's the supervisory committee doing it themselves.
My gosh.
Did you put it into those three? Did you talk about?
I call it the clipboard audit. Yeah.
Right. Yeah.
And you have to be very, very, kind of very, obviously very small on that. So we did have discussions on all of that. And again, so in addition to internal controls, let's stick with, we'll be Sesame Streets and stick with the letter I, independence, right? That much of what should have detected this, the alleged behavior, it seems to me that an occasional review of the senior executive's accounts, even if it's just volume, right? Even if you don't look at, Tiffany's and a Hong Kong jeweler and real estate agents in Boca, even if you just look at volume, that should be able to be done remotely. If you have to go in and ask the CEO to release the hold on their account, to unblock it, could you print these? Can you just print your account statement? No. Hey, David, I'll just print these out. Let me tab them and highlight them because you may have some questions. So just divert your attention to the brightly yellow colored things and have a story about that usually involves a joke or something that will raise your concern about me and show me your love and affection. So most of these should be able to be done, without anybody else looking at it. And let's face it, NCUA will tell you, my gosh, CPAs will tell you, we're not conducting a fraud audit.
Correct.
But if they're conducting an audit on the internal controls of the most risky people within the credit union, and I say this all the time to supervisors, and how many of you guys do, pop teller audits? And, a third of them proudly raise their hands and like, you're wasting your time, right? Because they are the least likely to hit you big. You know why? Because you count their money before they start, you count their money afterwards. The most likely to cause problems, and statistically we know this from, NCUSIF statistics, especially at credit unions below a couple $100 million, is going to be internal fraud. Who has the greatest access? Who are the single points of compromise? Who can cover their trails? Who knows what you're looking for, when you're coming, who packages most of this stuff? And it's them. So yeah, it does go back into that trust, but verify. And I would imagine a lot of people that are watching your podcast are looking at other people maybe around the room or making a note, on a piece of paper. So when they're coming back and they're saying, do we look at that? I don't ever recall looking at that. Is that something we should be doing?
And how often, right? Yeah, it's great. And then like the volume, right? You talked about 20 million going through one account, you shut it down, you've got 10 million going through the other account, but 20 million roughly, that's probably 10, 12, 14% of the credit union's assets, right?
I mean, that's this. I mean, the percentage, 95 million on a 260 million. And then overnight, all the sentences were redone because it went from the $260 million credit union to suddenly, the $160 million credit union.
Sure. And I mean, I going back to the first podcast I did, when I looked at the data, I ran some analysis to compare it to other credit unions. It was the only credit union over $5 million in the country that had a loan to asset ratio of less than 27% and was borrowing money of any kind, right? So you don't have any loans, but you have this need for millions and millions of dollars of borrowings because you need the cash. A logical thing, and hindsight's 2020. I mean, when I was an examiner, I was on 2 years. Went up to I'd done a follow up at a state chartered in the Midwest, and the state didn't trust this guy, and lo and behold, he ended up having stole money. The time I came back, the next time, it got bloody in a lot of ways. But I started going, how did I not see this when I was in here 6 months ago? And you got 24 hours, 32 hours, 40 hours. You get an answer to this, you get an answer to this. It kind of makes sense, and you move along. Yeah, that trust but verify is a big thing. So what about any discussions, any thoughts when you're having those training about should CPA opinion audits be required below 500 million?
So, I mean, boy, this has been a question, and I put this up there with the, should the currency transaction report threshold be raised from $10,000? Because I don't know, but chances are that number has been set at 500 million for almost as long as CTRs have been set for 10,000.
Right.
And my gut feeling is Yeah, absolutely. And I have a number of clients that are below 500 million
That
that are
doing
CPA audits
win.
because let's face it, CPA audits add value. They add, they add extra accountability. They add extra assurance, which is what internal controls and everything else, is. And we haven't even gotten into the, you know, that whole. If you ever need an example of why you need to verify financials, just because
Right.
that $95 million wasn't where it was supposed to be. And I'm going to go ahead and use a regular regulatory phrase and say credit unions need to be aware of their size and complexity. So they need to know what oars they have in the water. They need to know what doors and windows, they have open and available to offer their products and services. And at some point, that cost and the two big things I always hear, oh, it costs too much, or when the CPAs come in, especially when they come in the first time, they're going to take so much staff time away. Yeah, if I had to pull that number somewhere, and of course you go back to the hindsight, to pull that number down to 250. Um, I think that's a safe number. And let's face it, we have a situation with the advent of technology and the efficiencies that offers that, um, you, 20 years ago, you didn't have smaller credit unions that were offering an almost identical product
Absolutely.
load to the
Great
big
point.
to the big ones. And now you have $100 million credit union that if you go to their website well, do you have Zelle? Do you have Apple Pay? Can I do this? Can I do account to account? Do you have commercial accounts? Hey, my brother has a marijuana dispensary. Can you work with him? Yes, 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 yes. So, I mean, I do think that $500 million, if somebody's just counting on that, I think counting on the wrong fingers.
Sure. Right. And I can't emphasize enough. If you're at 450, if you're at 425, if you're at 350, the reg might not require, the act might not require you to get your opinion audit. But if you're not getting an opinion audit, you might want to rethink that because you can afford it, and it's worth every penny as far as a little bit of the good housekeeping seal of approval, if you will.
No, and I think that's what it is. That's what the CPA, that's what that CPA signature gives you. And I just did a training on a supervisory committee making that decision. Do they retain their auditor? Do they change the auditor? What's that look like? But especially if you're getting it done for the first time, um, let's go back to that independence. You can add scope to it. Right. So we know what the current NCUA regulations say about what has to be in that audit. But I tell people all the time, it's a little bit like a cafeteria plan. If you wanted to add a segment on a relatively detailed review of senior executives insider accounts, you can just add that. Right. I mean that boom, you add it right right on there. And um, going back and looking at this, I don't think I had been aware of that. I guess I had, because I think you had mentioned it before, the loan to share and borrowing. But I also think about the fact, okay, this person's entry point, I think, to the credit union was as CFO, and when they ascended to CEO, they never filled that
She's very efficient.
And what, hey, Mark, I don't mind doing this work. It's hard.
Right.
To keep my mind down because, boy, I'd love a good go-getter, but for right now, I can handle this and we'll save some money.
Yeah, board, that frees up more training opportunities.
Absolutely. Yeah. Have you guys ever been to the Galapagos?
That's right. That's right. Oh boy. Well, I've got a couple other topics written down here I wanted to kick off you, but any other thoughts on fraud or supervisory committee before I pivot into a couple other topics?
I mean, we can, we as a credit union, and again, I think I should also confess that I'm a recovering supervisory committee member. I served supervisory committee for 10 years. I was chairman, I think, for 6 or 7 years. But you can create a process, not only an audit plan, and you don't need an internal auditor for an audit plan. This is just what you're going to look at, but you can build it out And you mentioned this earlier, that how often you can build it up, that periodically you look at these kinds of things. And there are already processes within the credit union that are designed to detect unusual behavior, right? Such as, oh, I don't know, countering the financing of terrorism, Bank Secrecy Act, all of those things. And, is the supervisory committee getting that information? Because, I'm going to guess, and I don't know this, and shame on me, I should look it up, but I'm going to guess, I'm going to bet dollars to donuts. And, you know me, I love a good donut. I'm going to imagine that the CEO was also the Bank Secrecy Act officer. Which means any reports that came up on unusual activity, which of course could be volume driven,
Sure.
would have gone, to their desk. So, you can hardwire in these lessons learned. You can do it in a way that's not going to, kill morale or esprit de corps. You can do it in such ways that it's behind the scenes, right? And reinforce the fact that, what's one of the biggest things, if not the biggest thing, keeping honest people honest? It's fear of detection,
That's right.
right?
It's the cop car that doesn't have anybody in it that makes you slow down.
Yeah, which, but maybe occasionally, right, as we're reading more and more, occasionally, one day out of seven, there is somebody in
There's
it,
somebody. Yeah.
right? It's the Russian roulette of enforcement. And I guess the last thing I would say on this is going to be, you know, events like this. Obviously this is the most dramatic event that I can ever recall. But on any fraud event, it wasn't one thing, right? There had to have been a cylinder
Sure.
of failures that did it. And we talked about having that second person that's there, right? So that removes a lot. So I'm going to go on vacation. Hey, I need you to answer this. And now
Right.
somebody gets this email or report and it doesn't have my name on it. So, you have to understand that. And flip side, it only takes one of those cylinders failing, a
Right. Yeah.
whistleblower,
Yeah.
an auditor who happens to notice, wow, wait a second, that investment verification form from this corporate, it's usually pink. And the one they handed me was blue. That's weird. And they look into it and everything full.
Well, that was that there was you just triggered a thought, the fake CDs, well, in Syracuse.
I was going to say it was up north.
Yeah, it was a guy who worked for me, and they were at the diner,
The diner, absolutely.
and the waitress said that asked what they were doing. They said, "We're in town doing an exam at." Oh, I'm a member there, and the one of them said, "Hey, is this what their CDs look like?" And they say, "Oh no, that's the old letterhead." And it turned out that they had this old letterhead. They used fake CDs to show that they had, or it was the bank. It was the local bank's letterhead, and the letterhead showed that they had CDs which secured the loan, but there were no CDs. So good sleuthing on that.
And they're just an absolute happenstance. And again, it caused them to ask a simple question. And it led to all that. Again, I mean, what we want with supervisory, we want that natural curiosity, right? Combined with a process that's designed to maximize their role. And their role, by definition, is to shine that flashlight.
Right.
Are the financials correct? Are the policies being followed? Are all those internal controls, are they, not only are they being followed, but are they good enough?
Absolutely. And then if you can play it kind of like Columbo, I'm dating myself there, but oh, yeah, one more
One
question.
more question. Oh man, I love, and that show was on for like 20 years.
It
Peter.
was, yeah, yeah. I gotta cue that up and watch some of those. Those were good. All right, so I've got 3 other things I've got written down here. You can pick and play with any of them, but we've previously talked about succession planning. We've previously talked about collections, and then we have the whole cornucopia of the NCUA board. You've got Helpman wanting to go over here. You've got Cruz having had his hearing but not having had his vote. Right. And you've got Harper and Oska wanting to get back on. So NCUA board, succession planning, collections. Any thoughts on any one of those or all three?
Speed round. Yeah, absolutely. So let's invert up.
That's
So,
right.
um, one of my daughters is an attorney, and she has a sense of humor, a bit of an irreverent sense of humor, like her old man. And a couple of years ago, she sent me a T-shirt, and it said, "So long, Chevron deference. We'll miss you." And it was absolutely fabulous. So I'm anticipating I'll have a Humphrey's Executor.
That's, you know what you're getting for Christmas.
Yeah, there you go.
Right.
There you- Or any of your listeners, when they get my email address, I'll be happy to give you my my PO box, and I have no problem giving you guys good references for good gifts.
Very
Um,
good.
It is in the same. I'm almost speechless, Mark, and that's hard for me. It goes back to that, may you live in unique times with the changes to Humphrey's Executor, right? And let's remember, this administration, Trump 47, being political, did not get everything it wanted in all of its Supreme Court cases. And we know that their protocol is to push things absolutely to the edge, to bring things up to the various levels, and that if it doesn't work, okay, they go back to the drawing board, they see where the boundaries draw. For Humphrey's Executor, what we appear we have, no matter what vote, is that the administration has the ability to remove board members. Again, carve out for the Federal Reserve board members with some amount of carte blanche. Now, depending on how the wording in the controlling documents, we know the Federal Credit Union Act did not have a for-cause wording, which probably does not bode well for the prior board members, although I'm making no predictions about that. What I would say is that my primary concern is going forward, that you're just going to have at the highest level of these agencies, you're going to have a clean sweep every administration, because this is not a Republican versus Democratic issue. Now, people may say how it's applied, and again, you've been inside DC. I've been inside DC for 40 years now. This is an executive thing. How much power does the executive want? People forget that when the Biden administration took over for the Trump 45 administration, they only rescinded 30% of their executive orders. I've had people guess, oh, they rescinded all.
Really?
It was only 30%, which means that a Democratic president and their people looked at that and said, "Ooh, you know what? We're going to keep that in our back pocket." So what that means is, and no offense to well-placed former bureaucrats, but this is going to hand so much more power to the bureaucracy, because you're not going to have these board members that have been on for long enough to understand what's going on. Combined with the potential chilling effect. All right, you're asking me to serve, and you have 2 years left on your term. I got to tell you, I got to work for a few more years, and I don't know if that's going to work. So that will have an interesting impact on the bureaucracy, on the machine. And again, I'm not saying good, bad, or indifferent. What I'm saying is that this is going to go beyond the next couple of years. Now, could Congress come in and make changes that fix all this?
Great.
Absolutely. And it seems to me that the Supreme Court, in numerous of the cases, have come in and said, "Well, you can fix this,
Right.
but this is what we have right now." So that's going to be quite interesting moving forward. And as far as what you just said about the current chairman, Hoffman, I mean, he already has a spot.
He's got him done.
The Public Accounting Board, which I think the pay for that is dramatically higher.
Yes.
And so John Cruz, who is well versed in financial services, having been at Treasury for some period of time, so he'll be coming in whenever they've. I mean, who knows how this is going to be received after the decision. And then the question becomes, okay, will every one of these boards now have the maximum number of, reds appointed and just wait on everything else?
Right.
It leads a lot to a lot of questions. So those are my thoughts.
Those are good thoughts. And, who are they going to get to take the positions? If you get, because they get people that will move to DC, right? And thinking they've got 4 years, they're taking a term that has 4 years left or 5 years left or 3 years left or whatever. And if a term isn't a term, you're going to get a different pool of people who are willing.
Absolutely. And pool, it's naturally going to gravitate to people that say, all right, well, my life cycle is going to be, learning,
right,
and then doing business and making money to provide for my family and my retirement and all of that. And then the final season is going to be service.
right.
So, I mean, that's kind of the model that hopefully people do a little service all the way through.
Yeah, yeah.
But now you get people that are at the other end of the career, as
I like
opposed to
that take. I like that. I think that's the glass half full. Is you'll get people that are saying, "Hey, this is my second or third career, not my first or second career that I'm going to parlay into something." Right.
So that could be good, that could be bad. And I'm sure we've both known people that have had presidential appointments, and it comes with its own set of decisions. I mean, I have been, blessed to have dear friends that we've sat down over a nice meal and laid it out. And it's everything from, this is what I'm going to make. This is how I'm currently positioned. This is how that 1 year cooling off period after I leave is going to impact me.
Yeah.
And this is how I'm probably going to be treated when I go back to my industry, having served, at the foot of, Pickett administration.
Sure.
It's difficult.
It's difficult indeed. Very good. Very good. So,
Succession planning.
So give me the shotgun wedding succession planning update.
Absolutely. Well, because again, it's a natural flow in the conversation, because there is no succession planning.
Yeah.
For these boards.
True. Right.
So I am a huge fan of the junior varsity governance model. I like the associate board members. I think where appropriate, you could also do associate supervisory committee or audit committee members, right? They all have to have the same entry point. They all have to have the same qualification, bondability, non-disclosure commitment, and all of that. But it adds to that deeper bench. I talk about that, train on that all the time, the deeper bench. And I think that the new rule, whether you think you needed a new rule or not, I think one of the things it has done for those credit unions that have done something other than, here's the policy, all in favor, book, now it's in the book, we don't think about it again. It's having them think about that process. It is service on the board should not be a lifetime appointment.
Sure.
And again, I'm not saying it's about age, right? I have seen, top tier volunteers who were octogenarians, who were way older, and they're great, innovative ideas, commitment to the purpose. And I've seen some that are in their 30s and 40s who, let's face it, that children's
right,
that are not focused, not really helpful. So looking at your own governance documents and saying to yourself, do you realize that every nomination of an incumbent is a reselection? If I could just get that in everybody. So remember, it's not, if your nominations policy is, all incumbents are welcome to be on the board again. And because we know how it works most of the time, if there are 3 openings, right? Standard bylaws say you got to do at least 3. Most of them stop at 3. Very few say, we're going to go ahead and nominate 5 and go through the time and expense and uncertainty of throwing that out. So it's typically 3 for 3. So if all 3 say yes, we're done. Well, did you evaluate? And then, of course, that brings the bigger question. Well, if we evaluate them, which we should do, right? Did they show up? Well, let me back up. I mean, I'm a pretty simple guy. Here's what I expect of volunteers, right? Show up, be prepared,
Yep.
participate,
Yep.
play well with others, right? I don't need you to be an expert in this. I don't need to know your arbitrage philosophy with the Hungarian currency. I don't need to know that. Those four things were good. But if you're going to evaluate the people that are up for, not just nomination, but re-nomination, which means re-selection, then what are you going to do with the other 6 people? Or maybe you're going to review them. Well, should we review every year? Well, if you review every year, then whoever's up for nomination, then they're already covered.
Right.
And you hear all the time, the biggest, comment that I hear is, well, we can't find volunteers. We can't find volunteers. All right, well, you have to be deliberate about it. Where are you looking? Well, let's back up a few steps. What are you looking for? Because wouldn't it be good if we're going to evaluate our people? Wouldn't it be good if we had a basic job description that focused on, I don't know, show up, be prepared, participate, play well with others?
We posted we posted a flyer at the VFW.
What if we put at the local high schools?
Right.
Everybody that you participate with. Oh, you know what? We really help high school students because we have high school branches, or we do these poverty programs. You come in the poverty games where you're given a certain amount of money. Well, that's great. Who coordinates that?
Right.
Well, anybody member of the Lions Club, Kiwanis Club, Chamber of Commerce, Knights of Columbus, the local temple, the local mosque, financial wellness and cooperative movement. We go in together, right?
They go hand in glove.
I don't know. I'm thinking, wouldn't it be cool to work for some, organization one way or another that was, not for profit, not entirely for charity, maybe for service.
Right.
Yeah, throw that net out there.
Absolutely. The wisdom of crowds. Absolutely.
My God, wisdom. How much does that bull weigh?
That's right.
The law of large numbers. There we go. We could geek out all day. But I'm somewhat hopeful that this is getting people's attention. I have seen a deliberate movement over the last several years. I mean, when I walk into a boardroom to work with the credit union, when I go into a training or something like that, I am seeing younger faces, right? Newer faces.
Yeah.
And I think that's good. And it's doable. But for somebody, to look at me and say, well, the CEO's looking for other volunteers. Well, that's good as long as that's, one of several sources. But if the CEO is the only person finding volunteers, because they're the only ones in the community, well, then eventually you have a board that's made up of people that may feel beholden to the CEO.
We're back to where we started.
You know what? It's funny. Oh, that works.
The circle's complete. The circle's complete. Well, very
I
good.
knew a credit union once that on the supervisory committee, they looked around one day and they found out that most of the people on the supervisory committee were neighbors of the CEO.
Well, there you go. And he had a lot of pool parties.
They probably had a lot of different types of parties.
Yeah.
And on the collections item, I mean, when you continue to look at the statistics, right? It's the haves and the have-nots.
The K economy. Yeah.
It is absolutely happening. People forget, and I don't know what the exact number it is, but clearly less than 20% of the population is being directly impacted by what's going on Wall Street, right? And so you have a large proportion of people that are still having trouble every month. If they have to choose between after-school programs for a child or making that minimum credit card payment, we know how it's going to work. And credit unions need to leverage. Just did something just recently on this. Need to leverage all of these analytics all of this technology, and I'm hesitant just to say AI. It's about more than that. But I have a simple message yesterday. If your credit union is already using all these analytics to discover opportunities to loan to people, maybe you're even beyond that. You want to find a way to underwrite even more risky loans so that you can serve greater parts of your community.
Sure.
I'm all for all of that. Why not use all that data you're already, accessing, and try to be predictive on people that may be in trouble, right? Because by the time they hit one of those traditional buckets, 30 to 60, 60 and over, reportable, by the time they hit that, by the time a person hits 2 payments or 3 payments past due, they're not going to talk to you anymore. It doesn't matter that you could walk them through, right? Collections only has the 2 moving parts, right? Willingness to pay, ability to pay. But both of those are built on the fact they've got to talk to you. And by the time they get 2 or 3 payments past due,
They don't want to talk to anybody about it.
nope.
Yep.
They want to run and hide. So, so that's what I would talk about. Marketing departments, lending departments, strategic thinking, and all of that are looking at leveraging all of this technology in order to serve more members, which I love it. So turn that inside, right? Turn that inside and, serve the members that may have the greatest need. People that have that unexpected expense, that health issue, an adult parent that comes back in, a relationship that didn't work, their overtime that suddenly gets cut off or whatever it is. Turn those analytics and see if you can be proactive in helping those.
I love it. I love it. I think that's a good place to wrap on how finding ways to use technology and tools to help those members that need the most help at any particular time.
Right. And I think it also builds on a theme, and this will be my closing thought. It builds on the theme of you probably already have the tools or the processes within your credit union to do an awful lot. Are they being activated? And even if they're being activated, are they being properly reviewed? Right. So on the collections front, if you already have this information, are you only using it to the people that you want to give a loan to? What about the person that you can pull up something and say, hey, you know what? David Reed's payroll didn't come in this month. Maybe we should reach out to them. Flip side, on those internal controls and things like that, you already have those tools there. You may even already have the results. Are you looking at them?
Yep. Excellent point. Well, David, this has been a lot of fun as always. Always enjoy catching up with you. If someone is listening or watching and they want to chat with you about anything we talked about here or anything else about credit unions, what's the best way for them to reach you?
Yeah, send me an email, david@reedandjolly.com. And I think you're going to put that up in the notes as well. That's by far the best way to reach me. Again, I love what I do. I love our industry. I think we're going to continue to go strong. And we're in some turbulent waters as we almost always are, one way or the other. So let's work together and get through it.
Yeah, just got to keep paddling when you're in those turbulent
That's
waters.
exactly right.
You know?
And don't answer the question with, this is always the way we've done it.
We've always done it this way. Yeah, not a good answer. Not a good answer. All right, David, I want to thank you. Listeners, watchers, I want to thank you, as always, for listening or watching. I hope you'll do the same again soon. This is Mark Treichel signing off with flying colors.